Hey everyone, it's Al Labaroa for Financial Intelligence Training. It's Wednesday, it's August 15th, and it's 2018. Now I am back in Fort Lauderdale after spending the beginning of this week in New York City, New Jersey, and Philadelphia. Crazy rains up in the Northeast, man. Those flash flooding that occurred, that's no joke. Now, unfortunately, across the pond, we witnessed another senseless terror attack in London this week. So our condolences to all those that are affected. Staying focused on news from across the pond, we continue to have Turkish woes. Now, yesterday's action across markets seems to have softened those concerns, suggesting that a contagion won't be as widespread as initially feared, or even at all. Now, this is an interesting thought to me, as emerging market currencies, well, they bounced off of the news, but I'm not really subscribing to that. I want you to think about this. Here at the helm in Turkey, we have a president that has no interest in playing nice. So let's compare two countries that are currently battling for first place in the worst category, meaning who can be the worst. First, we have Argentina, or as I like to call it, the other down under. So here we have a country with rampant inflation and a central bank that is fighting aggressively against it. The peso has fallen the better part of 40% year to date, I think 39 is the number, despite desperate efforts to support the currency, including 4 unannounced rate hikes, boosting the 7-day rate to 45%. Yes, 45%, and they pledged to keep it there until at least October. Now, in the land of Ataturk, Turkey, we have the opposite going on. A central bank, a president, same thing I suppose, that calls interest rates the mother of all evils. All this in the face of hyperinflation. The current pace there is estimated to be at 101%. So let me put that into perspective with a little humor here. Let's say that you live in Turkey and you happen to own a wrestling camel. Yeah, there's such a thing, look it up. And let's say you want to feed that camel. Well, your costs are up 100% year over year in your wheat exposures. Now, I use this humorous example because that type of inflation, it's not at all productive for an economy. A side note, on the wheat market, Turkey is the world's largest wheat flour exporter, and per the International Grain Council, they are expected to export over 5.4 million tons. That's huge. Ironically, Argentina, number 3 on that list. Now, wheat or camel wrestling has nothing to do with anything from a contagion perspective, but I mentioned to understand the reality of the people and the economic situation, which will have impact on all assets. Banking woes will spill over into foreign banks, as we've already witnessed and evidenced in the Stoxx Euro 600 Bank Index, which slid 3% last week. Now, today's journal has a great article on previous contagions and how they've spread or were contained and the variations. So when looking at the Turkish banks, one thing to understand is that they are loaded with foreign debt and dollar-denominated loans, which will balloon substantially as the lira continues its slide. So think about 2008 and think about those adjustable mortgages here in the US and how those payments ballooned dramatically. Now, domestically here, the greenback, well, it broke out of key resistance. We've been talking about that on the channel, and that will further add pressure to the currency. Now, Fed funds has a rate hike for September now priced in at a 96% certainty, up from 87% month over month. So I think the odds obviously are very high there. Now, for a quick glance at each of these economies, why don't you take a look at the ETFs ARGT for Argentina, TUR for Turkey, and you'll see that they both stink. And for the greenback, look at UUP. Now, I don't think any of this issue that we're seeing out of Turkey ends soon, so I continue to advise caution in that area. Now, on the U.S. markets, we seem to be the prize fighter across the globe. But I will mention many names are looking weaker and weaker here. This morning, the heavyweight NASDAQ is being punished by Tencent, and if not for Apple, Amazon, and Google, well, we'd have a very different picture there in the NASDAQ, meaning its recent uptrend. It's what's been supporting it, those 3 major components. So keep watching those names for any signs of potential weakness and know what to do if that happens. As always, identify your 3 main risk pockets and shore up any weakness with prudent financial planning. Now, our financial intelligence training students will know exactly what that means, what those 3 risk pockets are, and how important they are to your financial well-being. Now, in the meantime, if you're trading any of these moves, please keep in mind that stock and stock options involves a substantial degree of risk. If you like charts like I do, of course, remember that past performance is not necessarily indicative of future results. My name is Ali Baral for Financial Intelligence Training. Thanks for watching, everyone.